Good morning, Jim Barrett from RJO Futures, Wednesday 18th with notes and bonds. Notes and bonds are somewhat higher, slightly higher. Yesterday they had backed off the top of the range. Never want to buy the top of the range. Never want to buy the first attempt to take out the top of the range. Anyways, the stock indexes actually came back yesterday after getting hit in after the first part of the Bernanke's Humphrey Hawkins semi-annual speech or grilling in front of the Senate. Today, of course, we got part 2 going on. In the meantime, there was a little bit of economic news this morning. Housing starts 4-year highs. Surprised people a little bit. Allowed the S&Ps to follow through to the upside after a lower start. Put the notes and bonds under a little pressure, but we're snapping back already. You know, there's no reason for a sustained break. Yesterday's break was all about simply trade location. Again, first time up, trying to take out the top of the range, trying to push into all-time new historical yields for these instruments. Failed predictably, but the failure was no big deal. I mean, we're still in an uptrend, overall uptrend in notes and bond prices. Eventually, you know, we knock on the door again, 250 in the 30-year, and you know, I wouldn't be surprised to see that taken out. Currently, we're at around 259, and the 10s are around 148. I mean, again, keep your eye on the S&Ps. I mean, we may have already hit the highs of the day in there, which means you know, we'll continue to bounce off today's notes and bond lows, and maybe even work at a test of the highs very shortly. I don't believe there's any real surprises in the second part of this Humphrey Hawkins situation, but you got to keep your eye on that, of course, because who knows what these guys, the congressman that is, will ask, and you know, maybe something interesting develops. I can be reached at 800-500-2461. Discuss any commodity futures market. Remember, there's a risk of loss in commodity trading. Thank you.